Hey there, crypto warriors. Welcome back to Bonis Life, where we turn market chaos into trading clarity. I'm Boni, and if you're wondering whether to hold, fold, or go bold in the next 24 hours, you've come to the right place. Today, we're diving deep into what I'm calling the perfect storm, a convergence of technical signals, institutional money, and political winds that could send Bitcoin rocketing toward $116,000. But before we get ahead of ourselves, let's break down exactly what happened in the last 24 hours and why your next move could make or break your portfolio. First, let's talk numbers, because in crypto, numbers don't lie, though they sometimes whisper sweet nothings that lead us astray. As of this morning, Bitcoin is trading at $107,650, down a modest 0.14% in the last 24 hours. Now, before you start panicking about that red candle, remember that in crypto terms, a 0.14% move is basically Bitcoin taking a coffee break. The total crypto market cap sits at a hefty $3.31 trillion. Yes, trillion with a T, down just 0.28% over the past day. That's like a giant taking a small step backward before a massive leap forward. Bitcoin's been dancing between $107,250 and $108,790 over the past 24 hours. And if you're a technical trader, you'll notice this looks suspiciously like consolidation before a breakout. The key resistance level we're all watching, $108,800. Think of it as Bitcoin's current ceiling. Break through that, and we might just see fireworks. On the support side, $107,300 is our line in the sand. Hold that level, and the bulls remain in control. While Bitcoin's been playing it relatively cool, the altcoin space has been more volatile than a teenager's mood swings. Ethereum is showing some strength at $2,472, up 1%. Not bad for the second largest crypto. But here's where it gets interesting. We're seeing some serious outperformers. Lever is up 35%, HFT jumped 24%, and Arbitrum climbed 16%. These aren't random bumps, folks. They're telling us that smart money is rotating into specific sectors, and if you know how to read these signals, you can position yourself ahead of the crowd. Now, let's talk about the elephant in the room, or should I say the Trump in the White House. The past 24 hours have been dominated by political developments that are reshaping the crypto landscape faster than you can say diamond hands. President Trump's recent comments about growth offsetting deficits have reinforced what analysts are calling the bull case for Bitcoin and gold. When the leader of the free world essentially gives Bitcoin a thumbs up, we're not in Kansas anymore. Trump specifically said that Bitcoin is taking a lot of pressure off the dollar, and it is a great thing for our country. Let that sink in for a moment. The President of the United States just acknowledged Bitcoin as a dollar alternative. This isn't just bullish news. It's a fundamental shift in how institutional America views cryptocurrency. And the market? Well, it's starting to price in this new reality. But Trump isn't the only one making waves. The Federal Reserve is under increasing pressure to cut interest rates, and here's why that matters for your crypto portfolio. As investor Chamath Palihapitiya pointed out, there are trillions and trillions of dollars of dry powder on the sidelines that will need to find a home. When interest rates drop, that money doesn't just disappear. It flows into risk assets. And guess what's considered the ultimate risk asset with the highest potential returns? You got it, cryptocurrency. Speaking of institutional money, let's dive into some numbers that will make your head spin. We're currently witnessing the 11th consecutive week of positive crypto inflows, with $2.7 billion flowing into crypto products just this past week. That brings the total for the first half of 2025 to $16.9 billion, and we're rapidly approaching the $18.3 billion recorded by June 2024. The United States is leading this charge with $2.65 billion of that weekly inflow. That's not retail FOMO, that's institutional conviction. Here's what's really telling. Bitcoin captured 83% of these inflows, equating to $2.2 billion. This isn't diversification. This is concentration. Smart money isn't spreading their bets across hundreds of altcoins. They're laser focused on Bitcoin. And there's more. We're seeing a notable outflow in short Bitcoin products, with yearly outflows totaling $12 million. Translation: even the bears are throwing in the towel. Let's talk about the 800-pound gorilla in the room, BlackRock's Bitcoin ETF. This beast has accumulated over $70 billion in assets faster than any ETF in US history. To put that in perspective, BlackRock is now earning more fee revenue from its Bitcoin ETF than from its legacy stock-based products. When the world's largest asset manager is making more money from Bitcoin than from traditional stocks, you know the tide has turned. Now, let's get technical, because this is where the rubber meets the road for your next 24-hour trading strategy. TradingView's comprehensive technical analysis is flashing signals brighter than a Christmas tree. The overall summary shows a clear buy signal, with oscillators pointing to buy and moving averages screaming strong buy for Monday. The only dissenting voice, the Hull moving average, but in a chorus of bulls, one bear doesn't make a trend. Investech's algorithmic analysis is even more bullish, giving Bitcoin a positive score across short, medium, and long-term time frames. Here's the kicker. Bitcoin has broken out of what they call a rectangular price structure at $108,003 and surpassed the key resistance level at $106,000. In technical analysis speak, that's like getting a green light at every intersection on your way to Profit Town. The target that has everyone talking, $116,074. That's not some random number pulled from thin air. It's based on solid technical analysis and pattern recognition. But here's the roadmap. First, we need to break through $110,000. This level is expected to provide some resistance, but if Bitcoin can punch through it, we're looking at a clear path to new all-time highs and beyond. Let's hear from the experts who are putting their reputations on the line. Matt Mina from 21 Shares says, a clean break above $110,000 could trigger a fast move to $120,000, putting our $138,500 summer target within reach. But he doesn't stop there. Mina believes that with policy, macro, and flows aligning, Bitcoin could be setting up for a push toward $200,000 by year end. Now, I'm not saying you should mortgage your house based on one analyst's prediction, but when multiple data points align, smart traders pay attention. So, what's your game plan for the next 24 hours? Let me break down 3 distinct strategies based on your risk tolerance and trading style. First, for the conservative traders, the steady eddies of the crypto world. Your focus should be on the $107,300 support level. If Bitcoin holds above this level with decent volume, consider a small position with a tight stop loss just below $107,000. Your target? The $110,000 resistance level. It's not sexy, but it's smart. For the aggressive traders, the send it crowd, you're looking for a breakout above $108,800 with strong volume. This is your entry signal for a momentum play targeting $112,000 to $115,000. But remember, with great potential comes great risk. Set your stop loss at $107,500 and don't get greedy. Take profits at predetermined levels because in crypto, what goes up fast can come down even faster. Swing traders, this one's for you. The setup is looking juicy for a multi-day play. If Bitcoin can establish support above $108,000 and show sustained buying pressure, you're looking at a potential swing to the $116,000 target over the next week to 10 days. Your entry zone is $108,000 to $108,500 with a stop loss at $106,500. This gives you a favorable risk-reward ratio and aligns with the broader institutional flow narrative. But before you rush to your trading platform, let's talk risk management. The difference between traders who survive and those who become cautionary tales. Never risk more than 2 to 3% of your portfolio on a single trade. I don't care how convinced you are that Bitcoin is going to the moon. The market has a way of humbling even the most confident traders. Use position sizing that lets you sleep at night, not toss and turn wondering if you'll wake up to a margin call. Looking ahead, there are several catalysts that could accelerate Bitcoin's move higher. David Sachs, Trump's crypto czar, has called July a big month, expecting the signing of the Genius Act for stablecoins and the Clarity Act for market structure. These aren't just regulatory footnotes. They're the foundation for massive institutional adoption. When regulatory clarity meets institutional demand, prices tend to move in one direction, up. The macro environment is also playing into Bitcoin's hands. The US dollar index is on track for its biggest first-half drop since the 1970s. When the world's reserve currency weakens, alternative stores of value like Bitcoin become increasingly attractive. Add to that the trillions sitting in money market funds earning minimal returns, and you have a recipe for a significant capital rotation into risk assets. While Bitcoin steals the headlines, don't ignore the altcoin opportunities. Ethereum's recent strength suggests the ETH-BTC ratio might be bottoming out. XRP's institutional buying has soared 290%, and Solana is up 90% according to CoinShares. These aren't random moves. Their positioning plays ahead of potential ETF approvals. If you're looking for higher beta plays, these altcoins could offer leveraged exposure to the broader crypto rally. However, let's not get carried away by the euphoria. There are warning signs to watch for. If Bitcoin fails to hold $107,300, we could see a retest of the $105,000 level. Geopolitical tensions, while currently eased with the Iran-Israel ceasefire, could flare up again. And remember, we're heavily dependent on US institutional flows. Any shift in sentiment could quickly reverse the current trend. Here's your 24-hour action plan. First, watch the $108,800 level like a hawk. A break above this level with volume above the 20-day average is your green light for bullish positioning. Second, monitor ETF flow data. If we see another day of significant inflows, it confirms the institutional narrative. Third, keep an eye on the dollar index. Continued weakness supports the Bitcoin bull case. Your technical triggers for the next 24 hours: a close above 109,000 opens the door to 112,000. A break below 107,000 suggests a deeper pullback to 105,000. Volume is key. Any significant move needs to be confirmed by above-average trading volume, and watch the options market. Increased call option activity often precedes major moves higher. As we wrap up today's analysis, remember that we're witnessing a historic moment in Bitcoin's evolution. The convergence of political support, institutional adoption, regulatory clarity, and technical momentum doesn't happen often. But with great opportunity comes great responsibility to yourself, your portfolio, and your financial future. The crypto market never sleeps, and neither does our analysis. If this breakdown helped clarify your trading strategy, smash that like button, subscribe for daily market insights, and ring the notification bell so you never miss a crucial update. Drop a comment below with your Bitcoin price prediction for the next 24 hours. I read every single one and often feature the best analysis in future videos. Remember, this is not financial advice. It's educational content designed to help you make informed decisions. Always do your own research, never invest more than you can afford to lose, and consider consulting with a financial advisor before making significant investment decisions. Until tomorrow's market update, keep your charts close, your stop losses closer, and your diamond hands ready for whatever the crypto gods throw our way. This is Boni signing off from Bonis Life, where we turn market volatility into trading opportunity. Stay profitable, stay safe, and I'll see you in the next one.